What's up guys, welcome to another Top Growth Financial video. Today I will be talking about Fiverr, ticker symbol FVRR. They are currently down 76% from their all-time high set about a year ago. So are they going to continue to fall, or does this present a great buying opportunity? Stay tuned to find out. So Fiverr is a company that connects businesses with freelancers that offers services in over 500 categories. And we're going to take a look at their charts now, where you'll see that this is a company that greatly benefited from the emergence of COVID-19. Fiverr recently went public. They IPO'd on June 13th of 2019, which was great timing for them because they were able to go public before COVID-19 hit. At the very beginning of this 1 year chart is where Fiverr hit their all-time high of $336 per share on February 12th. Their stock price has been pretty much downhill ever since. We can see around the middle of 2021, between June and July, their stock price revived a little bit, but again, it's been downhill ever since after that. And now looking at the 1 month chart, we can see about 2 weeks ago, Fiverr hit a low of $69.84. And they're back up a little bit where they currently sit at $81. But don't let these charts scare you away from this company. We're going to take a look at their financials, and we're going to do a quick fundamental analysis on Fiverr as well. So Fiverr has very fast top line growth. The top line of a company are their gross numbers, so their gross sales and their gross revenue. And on top of that, their financial statements in general are also very strong. They have very high gross margins, a ton of operating cash flow, and a lot of operating leverage as well. Fiverr's business did increase greatly in 2020 and the first half of 2021. Now, there was some concern that Fiverr's increase in business was not sustainable, and we did see their earnings drop a little bit in the second half of 2021, but they're seeing that many of their buyers and freelancers are returning back to Fiverr, and this is a huge confidence boost when looking at the future. So when we look at their increase in business being unsustainable, we can compare that to their stock price, because when they reached an all-time high of $336 about a year ago, we weren't expecting that number to be sustainable either. $336 was a very unrealistic price. Their stock price got way overinflated due to that large increase in demand from Fiverr, and now we're seeing a correction from that. But going back to their fundamentals, we're still seeing increased growth overall. It's just that the pace has slowed down a little bit. In fact, analysts are estimating a 22% revenue growth next year. Analysts also estimate that around this time next year, Fiverr will become profitable, which is huge. That will open up so many more opportunities to invest in their business and really have the chance to grow. I mentioned earlier in the video that Fiverr already has a bunch of operating cash flow. So now once they become profitable, that will give them a great opportunity to just dump a bunch of money back into their company and really make it a mission to grow as much as possible. And that's going to be very important for the future because, and this leads me into the last thing I want to touch on in this video, is their main competitor, Upwork. They're very similar companies, they have similar business models, and they're also growing at a similar rate. So right now, Upwork has higher revenues, but Fiverr has much higher cash flows from their operations, which I already mentioned plays a very big role once they become profitable. So that's more of a long-term factor. Another thing that I've realized through research is that a lot of analysts seem more confident in Fiverr's upper management. Now, that's not a knock on Upwork's upper management. I've heard no bad things about them, but analysts have been very impressed with Fiverr's upper management, especially in the last couple years, the way they've been able to grow this company so far. Some people look at management, some people don't when researching the stock. I just thought that was an interesting piece of information while doing my research. So overall, when looking at the long term, it looks like Fiverr has the brighter future over Upwork. So now for the last part of the video, clearly Fiverr is a great company, they're doing great things, and we expect a bright future from them, but their stock price has just been falling and falling for the last year. Is now a good time to buy, or do we wait? This is really a personal preference. What I would suggest to do is I like to dollar cost average here. And the reason for that is because right now, this is a good price to buy in at. $81 is a good price. A fundamental analysis says that their stock price should be higher than this right now. The problem with this is that I think we're seeing a little bit of an overcorrection. And this is very common with a lot of stocks that we've seen that have benefited from COVID-19. They got overinflated, and now we're starting to see a lot of overcorrection. So the problem with that is that I'm not exactly sure how far we're going to see Fiverr's stock price fall. It's a good price to buy in right now, which is why I think we need to at least put a little bit of money into it. But I like dollar cost averaging here because we're not sure how far it's going to fall. But like I said, if you would like to wait, it's very possible it could continue to fall a little bit. But right now it's at a good price, and I always like to buy in when it's at a good price. Thank you guys for watching. Hope you enjoyed the video.